For months, it's been a whisper in the wind, a fear lurking in the shadows of the crypto market. Cardano, once a beacon of scientific rigor and long-term vision, has been battling a silent enemy: apathy, its price action, choppy, liquidity, thinning, and the conviction of its loyal hodlers, slowly, painfully fading. But what if I told you that the very architects of Cardano are now making a drastic, almost unthinkable move? A multi-billion-dollar pivot that could either be its salvation or its ultimate undoing. Hey crypto fam, and welcome back to the channel. Today, we're dissecting a development that has the entire crypto space buzzing. A move so bold, so audacious, that it's causing a seismic shift in how we think about Layer 1 blockchain treasuries. We're talking about Cardano's proposed $1.2 billion Bitcoin strategy. Now, if you've been following ADA, you know it's been a tough ride lately. Despite the tireless optimism of its co-founder Charles Hoskinson, the market has been, well, unenthusiastic. The price action has been like a flatline on an ECG, punctuated by frustrating false breakouts. Investors, especially retail, are asking, what's next for Cardano? Is the dream fading? But behind the public struggles, a calculated, high-stakes game is being played. In a recent interview, Charles Hoskinson revealed a new, paradigm-shifting treasury strategy.
Materially impact Cardano by doing a conversion of 5 to 10% of the treasury into stable assets and assets like Bitcoin. And in doing this, we can create a yield, and that yield on an annual basis can be used to purchase ADA and over time replenish the treasury. And if this program is successful, then we can actually continue that strategy on an annualized basis and over a period of 5 to 10 years, potentially grow to $1 billion plus stablecoin treasury and Bitcoin treasury to augment and enhance the ADA value in the treasury that we have. This sets us up for great returns and for a pretty stable floor for the ecosystem as a whole, like you would want in any good sovereign wealth fund.
On paper, it sounds like a stroke of genius, a move designed to inject life back into ADA and bolster its long-term value. But as we all know in crypto, every master plan comes with a hidden layer of risk. And this one? This could put ADA's already sluggish performance to the ultimate make-or-break test. So, buckle up. We're about to uncover the intricate details of this strategy, weigh its ambitious promises against its inherent dangers, and ultimately help you understand what this means for your ADA holdings and the broader crypto market. This isn't just about Cardano, it's about a fundamental shift in how blockchain projects might manage their finances in the future. For years, Bitcoin has solidified its position as the ultimate digital store of value, not just for individuals or institutions, but now surprisingly for other major Layer 1 blockchains. The reason? Its ability to generate reliable, consistent yield. Charles Hoskinson has laid out a plan to fundamentally reshape how Cardano manages its vast treasury. The idea is brilliant in its simplicity. Take a portion of Cardano's existing $1.2 billion in ADA reserves, potentially around $100 million in the initial phase, and use it to purchase Bitcoin. But it doesn't stop there. The true innovation comes next. The yield generated from these Bitcoin holdings would then be used to buy back ADA tokens from the open market. Think about that for a second. It's a self-sustaining feedback loop. Bitcoin's yield fuels ADA buybacks, which in theory should gradually reduce ADA's circulating supply and over time support its price appreciation. Let's run some numbers to make this concrete. If Cardano were to acquire, say, 11,320 Bitcoin at a spot price of $106,000, a hypothetical scenario, of course, given market fluctuations, and Bitcoin then reclaims a level like $110,000, that position would generate unrealized gains of approximately $40 million. If that $40 million were then redirected into ADA buybacks at a spot price of, say, 60 cents, Cardano could purchase roughly 66.67 million ADA tokens. That's a significant chunk. This would reduce the circulating supply, creating a natural upward pressure on the price and reinforcing long-term price support. This is a high-conviction strategy, no doubt, and one that could profoundly shape ADA's long-term value trajectory. It's a move away from simply relying on the usual DeFi staking rewards towards generating real yield from a battle-tested asset like Bitcoin. However, and this is where the suspense builds, the market isn't a simple equation. This strategy, while ambitious, is not without its immediate risks. The critical question isn't just can it work, but can the market absorb the initial shock? Here's why this is such a precarious moment for ADA. We've been observing Cardano's price action closely, and its 60-cent support zone has been, frankly, structurally fragile. Large holders, the so-called smart money, have shown signs of retreat, not accumulation. This means the big players haven't been buying the dips. They've been selling into strength. Look at the ADA to BTC pair. It's retraced back to its pre-election lows. This is a stark indicator of weakening relative momentum compared to Bitcoin. When ADA can't keep pace with BTC, it signals a deeper underlying issue with demand. Furthermore, our analysis of futures order books reveals a concerning lack of aggressive bids. Speculative liquidity for ADA is thin, which directly reduces any short-term upside pressure. This kind of environment makes the asset highly susceptible to downside volatility. Taken together, Cardano has seemed to be trapped in a pump-and-dump loop. A cycle where retail gets excited, pushes the price up, and then smart money exits, leaving those new buyers holding the bag. ADA has already posted 2 lower lows this month alone, significantly increasing the probability of a deeper correction ahead. In such a volatile and fragile setup, even a modest wave of selling pressure, perhaps from the initial ADA conversion to Bitcoin or from concerned community members, could spark broader panic, especially among retail participants who are already on edge. Unless we see a sudden and meaningful shift where smart money starts aggressively scooping up ADA supply, this treasury strategy in the short run is going to look like a bold but incredibly risky bet. So, what does this all mean for you, the everyday investor, the long-term holder, the curious observer? It's clear that Cardano is at a crossroads. This isn't just about a price pump, it's about a fundamental reevaluation of its financial engine. While the short-term outlook presents significant challenges, if this strategy is executed methodically and with minimal market disruption, perhaps through over-the-counter deals or time-weighted average price executions as Hoskinson hinted, the long-term potential could be honestly transformative. Here's why this proposal, despite the risks, marks a paradigm shift. Instead of relying solely on inflationary staking rewards, Cardano is aiming for what's called real yield derived from Bitcoin, which is, a globally recognized sound money asset. This could really set a new standard for how Layer 1s manage their long-term value, moving towards more sustainable asset-backed growth. By acquiring Bitcoin, Cardano aims to basically prime the Bitcoin DeFi space. This could lead to greater interoperability with the largest cryptocurrency ecosystem, potentially attracting more liquidity and users to Cardano's burgeoning DeFi applications. Just imagine seamless wrapped Bitcoin or WBTC-type assets or other Bitcoin-backed DeFi on Cardano. This could significantly enhance its utility and appeal. Over time, if successful, the yield generated from Bitcoin could not only buy back ADA, but also contribute to the overall growth and diversification of Cardano's treasury. A stronger treasury means, more resources for development, innovation, and ecosystem grants, really solidifying Cardano's future. Now, how do you navigate this high-stakes situation? This is a moment for deep reflection. Do you believe in the long-term vision of Cardano and the strategic implications of this move, even with short-term volatility? Consider dollar-cost averaging to mitigate potential immediate price shocks if you're looking to accumulate but, understand the risks of further downside. So, watch closely. The initial implementation of this strategy will be critical. Any significant dip in ADA during the conversion phase could present a compelling long-term entry point if you believe in the strategy's ultimate success. However, be prepared for increased volatility. Beyond the headlines, it's important to continue to research Cardano's core development, its dApp ecosystem growth, and its network activity. A healthy blockchain needs more than just a clever treasury strategy. It needs adoption and utility. No matter your position, prioritize sound risk management. Never invest more than you can afford to lose. Set clear entry and exit strategies, and consider taking profits on strengths if you're concerned about short-term downside. If this strategy works as envisioned, it could very well set a new standard, not just for ADA, but for how Layer 1 blockchains manage long-term value in an increasingly interconnected crypto world. It's a bold play, a risky bet, but one that could redefine Cardano's trajectory in the years to come. Before you make any moves, a crucial reminder. This content is for informational and educational purposes only, and should not be considered financial advice. The cryptocurrency market is extremely volatile, and all investments carry significant risk, including the potential loss of all capital. Always conduct your own thorough research, consult with a qualified financial professional, and never invest money you cannot afford to lose. My analysis is based on current information and market conditions which are subject to rapid change. What are your thoughts on Cardano's Bitcoin strategy? Is it a stroke of genius or a desperate gamble? Will it save ADA's price action or send it further into the abyss? Let me know your predictions and concerns in the comments below. If you found this deep dive valuable, smash that like button, share it with someone who needs to hear this, and don't forget to subscribe for more expert crypto analysis. Until next time, stay vigilant, stay informed, and navigate these markets wisely.